Benjamin Graham was Warren Buffett's mentor. Graham's value investing framework consists of three categories of stocks: defensive, enterprising, and net, and 17 rules for identifying them. Although Graham's framework comprises primarily of ratios that are self-calibrating, there are a few region-specific parameters that may need to be customized if one is investing in economies other than the United States. Today we'll discuss one such customization using the currency conversion rates, interest rates, and consumer price index values of the United Kingdom. A point of interest here as well is that Graham was British born. The specific mathematical derivations of these adjustments have been covered in earlier videos and are included in the playlist given at the top right-hand corner at the end of this video. In today's video, however, we are simply looking at what the values for a British customization would be. The first region-specific parameter in Graham's framework is the company size rating. Graham recommended a minimum sales figure of $100 million for defensive-grade industrials, which works out to $700 million in 2022 based on the increase in CPI in the United States. Since the British pound sterling is worth roughly 1.21 times the United States dollar as of 2022, and since Graham value lists figures for British stocks in the pound sterling, the sales rating will simply need to be reduced by 1.21 times to screen for defensive-grade British stocks. A sales figure of £578 million corresponds to the $700 million required for a US stock. Rounding up yields a sales figure of £600 million or size and sales filter value of 120% on Graham value. For defensive-grade public utilities and financial enterprises in the US, Graham recommended a minimum total assets figure of $50 million, which works out to $350 million today after adjusting for inflation. A calculation similar to the sales one yields a minimum total assets figure of £300 million today, or a size and assets filter value of 120% on Graham value. The second region-specific parameter in Graham's value investing framework is the earnings growth rating. An earnings growth rating of 100% on Graham value corresponds to an actual averaged earnings growth of 33% over the past 10 years, just as Graham recommended for defensive-grade US stocks. Now, since the change in CPI in the UK over the decade 2012 to 2022 is almost identical to the US number, 25%, this rating requires the same adjustment in the UK today as in the US. Now, the earnings growth filter on Graham value will therefore have to be set to 75%. The CPI data used here is available on the website of the Office for National Statistics. The third and last region-specific parameter in Graham's value investing framework is the intrinsic value. Now, the intrinsic value of a defensive-grade stock is its Graham number. A Graham number, a percentage, of 60% on Graham value corresponds to the 10-year AA corporate bond yield of 2.16% in the US as of January 2022. Now, since bond yields in the UK are close to 2.21% in July 2022, this too allows for a PE ratio of up to 45, or a minimum Graham number percentage of 60% on Graham value. Enterprising grade stocks too would need to have their intrinsic value percentage adjusted similarly to 60%, since both calculations are based on similar principles. Net current asset values are calculated using asset values alone, and so net grade stocks do not require having their intrinsic values adjusted. A quick word on currencies. British stocks are often traded in pence sterling, while their fundamentals are reported in pound sterling. Graham value takes care of this currency conversion. For any other discrepancies between the currency codes of the price data and fundamental data for a stock, the stock's previous close is marked 0 on Graham value so as to prevent it from being accidentally cleared on the screeners. Graham's value investing framework is designed to compensate for all accounting adjustments that fall within regulations. Graham does caution investors about investing in stocks falling outside their own economic jurisdiction. The stocks and screeners on Graham value therefore include an HQ field, which can be used to determine if the company is headquartered in a region different from the one where it has been listed. However, Graham's value investing framework can be customized for non-US currencies, interest rates, and inflation within any reliable economic jurisdiction. The statistical work of finding such stocks is easily automated using modern data mining software, and that's exactly what Graham Value does.